All right, so we are at the wellsfargo.com webpage. We're going to take a moment and go over to the pages in order to help you learn the options on forbearance and repayment plans if you're having some issues making the monthly mortgage payments and possibly facing foreclosure. So if you're at this page, which is wellsfargo.com, you want to hover your cursor over loans and credit, and then in this box that pops up, hover over to get help with payment challenges. You're going to left click once there. When this other new page comes up, scroll down and go to mortgage payment help. Left click once with your cursor. And then once you get to this other page, scroll down under explore the options. Left click once on understand the possibilities. Now finally, this is the page that is going to go over the options available to you in order to help avoid foreclosure. And the first one you'll see here is forbearance and repayment plan. We scroll down a little bit, we'll take a look at this box of options. You'll see the forbearance, repayment, loan modification all fall under the category of allowing you to keep your home, right? So if you're looking to stay in the house, then these are the options that you're going to look for: to do a forbearance, to do a repayment, or to do an actual loan modification. If you're looking to leave the house, stop the foreclosure by leaving the property, then you'll be looking at either a short sale or a deed in lieu, and we'll talk about that in just a second. But the first thing I want to address is the forbearance. So if you click on View Details, you'll come to this page and you'll be able to scroll down and read all the details about what the forbearance plan includes. But the gist of it is that your regular monthly mortgage payment may be temporarily suspended or reduced for a specific period of time, which will allow you to get over your financial situation or for your financial situation to improve. So the gist of the forbearance is the underlying fact that it will apply or be applicable if your situation is temporary. Same thing to a repayment plan. The difference between a repayment and the forbearance, and we'll take a look right now, is that with a repayment, missed payments will be divided into manageable amounts and spread out over time. So the forbearance, you'll have very possibly a time where a month or 2 months, typically it could be 3 months, you will not have to make a payment or a very reduced amount, if any, in order for you to catch up with your finances to get to a better place. With a repayment plan, they'll take the payments that you've missed and divide them up and add them to your current mortgage payment. So you might see an increase in your mortgage payment in order to allow you to catch up with the missed payments and bring your loan current. And again, this would be in case your financial situation, your financial hardship was of a temporary nature, right? But those are the main differences between a repayment and forbearance. Forbearance, sometimes we'll see a pause on your payments or a drastic reduction, and with a repayment, you may actually see an increase in order to catch up with the payments that you've fallen behind on. Lastly, loan modification mostly applies to those that are going through financial hardship of a very long-term nature. If you click on here, you'll see that you can read the information about loan modification, but the basis of it is that it will actually modify the actual terms of your loan, be it changing a variable interest to a fixed interest rate, for example, or changing the length of the term. If you have a 15 or 20-year term, they may modify it and extend it to a 30 or sometimes even a 40-year term, allowing you to have more time and allowing you specifically for your monthly payment to be adjusted to a lower, more comfortable amount in order for you to be able to keep making those payments from the point that the loan modification is done onward. Now we go back. The last two things that I want to touch on is a short sell. If we click on view details and you scroll down, there's something called a deficiency balance that a lot of people are not aware, and it's actually not being talked about, but that it should be and it needs to be addressed if you're thinking about doing a short sell or a deed in lieu, which we'll touch in just a second. A short sell, for those that may not know, involves selling the property at a lower price than the amount that is owed on your loan. And that, of course, takes the bank's approval. You can't simply put the property on the market, sell it for a lesser amount in order to get the property sold and be done with it. It involves an entire, very thorough and complicated process, at the end of which the bank has to give its approval, obviously because they're approving to accept less than what it's owed on the loan, in order to make the sale happen. But what can happen, or a result of that transaction, could be a deficiency balance. And if you hover over the phrase deficiency balance, a box will come up which will try to explain what that means. And a deficiency balance here says the deficiency between the amount still owed on a mortgage and the amount the home is sold for by the borrower in the case of a short sale. So, for example, if your house is worth, let's say, um, you bought the house for $250,000, your loan is, let's say, for ease of math, we'll say you took out 100% financing and the loan is $250,000 as well. However, you've fallen into a financial hardship, you've fallen behind your payments, and one of the options that you decided to look at is a short sale. You put it on the market, you sell it for $150,000. You get a buyer comes in, pays $150,000. The outstanding loan, however, your outstanding loan is for $250,000. That means there's a difference or a deficiency of $100,000. What happens to that amount? Well, in a short sale, that amount, which is considered the deficiency balance, could be sought from the bank by you. In other words, the bank could come after you and say, hey, you owe us this money. It's your responsibility to pay. Most likely they will not do that. What actually may most likely happen is they will possibly report it. They have the right to report it to the IRS. And in your income tax return for that year, you'll see an increase of $100,000 to your income because it will be reported as ordinary income. So that may bring with it a pretty steep income tax liability to you. If you're accustomed to having file income taxes at a certain tax bracket and all of a sudden your income increases by $100,000 or whatever the amount of the deficiency is, right? That could put you at a higher tax bracket. And even if it doesn't do that, it would very likely increase your taxes due for that year. So that's something that you want to keep in mind. And that's something that actually is not talked about either. If we go back a page, in regards to deed in lieu, a lot of folks think that they'll give the keys back to the bank and they can forget about anything else from that point on. But if you scroll down, you'll see here the deficiency balance is also a possibility that can occur when you do a deed in lieu of foreclosure. So these are the things you want to keep in mind. But I wanted to take a moment and go over how to get to the page inside Wells Fargo in case you do have a Wells Fargo loan and you're facing the possibility of foreclosure. This is where you would go in order to get more details on the options available to you in regards to your Wells Fargo specific mortgage. But listen, if you want to know all the options available to help you stop the foreclosure, if you want to either stay in the home or sell the property, visit wehelpstopforeclosure.com. You'll learn about the vast resources available to you. You do not have to go through this process alone. You can have us in your corner if you'd like. We have built great relationships with some of the best HUD-approved counselors, excuse me, foreclosure attorneys, bankruptcy attorneys, and other professionals like mortgage brokers and credit repair companies to help provide you with the best resources and helping you stop the foreclosure of your home. And by the way, there are no fees or hidden charges. You'll never have to pay a fee for our service. So visit us at wehelpstopforeclosure.com and learn today how to stop the foreclosure of your home.